a common question. Should you go the real money route, trading on MT4, MT5, somewhere like that with your own funds? Or should you go down the prop firm route? Now, we know prop firms now are ubiquitous online. Loads and loads of people are using them, taking advantage of the growing industry. And some firms are doing well, some aren't doing so well because they're not well managed. Mostly, if you're using reputable ones, you should be okay. We teach traders in our academy to do just that. Now, I would say the main difference between prop trading and using your own money, myself, I've got both. So I know really, sort of point of view that should be taken. The differences fall into very, very simple categories. And it just comes down at the end of the day to risk. Is it your risk? Is it their risk? And how much risk is there overall? And I would say based on your experience, based on your capital size, you're either going to fall into one of those two categories, which is going to be really useful because everyone watching this video is probably going to, be from different skill levels, different backgrounds, and everything in between. So whether you're new, whether you're somewhat new, you might be in our academy already, you might be experienced. It doesn't really matter what your skill level is and what your equity size is. This one is going to help you out. Just make sure you pick reputable firms. Okay, you want lots of reviews. You want them clearly based in, somewhere like London or somewhere in the US or in Europe in major cities, not some back alley office, or some place you found on the back of Google. So let's go ahead and let's jump in and have a chat about it. So we can discuss prop firms versus personal accounts here. You can see this current account is open. I mean, the difference really, I suppose the main thing you want to understand is that what most prop firms do is they put a limit on daily drawdown. So the daily drawdown limit for lots of firms is 5%. Okay, so that's 5% of equity to begin with. That's static. So, for most firms, it's static. So let's say you go $5,000 down in one day on your 100K account, it's going to be a problem. And they will cause you to fail and defund you. The 10% max drawdown rule exists too. So, to avoid that, you would have to make sure really you don't go over 4.99% drawdown on any day. So the biggest caveat or the biggest part between trading your own money and trading with a prop firm is the drawdown limit. So I suppose really that's what separates the two. The benefit mainly of using prop firm money rather than your own account has two streams to it, really. The first is that, of course, all the losses, if there are any, I mean, obviously, if you go underneath this video and trade with our method, you should be fine, or at least our members are. With your own money, it doesn't matter if you go over the drawdown. However, what you can do is if you do end up closing any losses, the prop firm absorbs them. So the prop firm actually pays for the losses anyway. So you can't have high drawdown. However, when you do have any drawdown, it's not your drawdown. This is OPM. Okay, you're using you're using someone else's money essentially. The extra point to that as well is when you make 10%, for example, you'll get scaled up. They'll put your funding up. You can have 10% more in your broker if you make 10%. Let's say you have 100 grand in an MT4, MT5 account and you get to 110. You've only got 10,000 more. Lots of these firms may even double the capital available to you. So again, it offsets the fact that you've got those drawdown limits, those max drawdown limits, daily drawdown limits. If you're someone who's starting off small and doesn't have a lot of money to begin with or starting capital, then definitely I would probably go down the prop firm route. Because to make money in trading, you either have to trade a lot or have a lot of money and trade less. Okay. Lots of people think you make millions off like a 5, 10K account. It's just not reality, or at least not straight away. You'd have to trade for a long time. So the difference really, I suppose, between a prop account and a real account is the prop account has drawdown limits. However, any losses within that drawdown are covered by them and they'll scale you up as you make more money. Whereas on your real money account, you take all the profit. If you're in the UK, you can spread bet it. I think it might be the case in Canada. Possibly you have to check the tax laws on that. but you don't have those drawdown limits, so you can stretch your drawdown out wider with your own funds. But I would certainly say, if you're new, you want to be using prop firms now. Okay, and the reason why I say now with such impetus is because the industry is growing and they're all fighting for custom. Okay, if you use reputable firms that have obviously got ratings, they'll be happy to keep you on. I think really it's a myth. A lot of people say, "Oh, but they won't pay you out." You have to remember it's in their interest to pay you out, because if they keep paying you out and you keep trading well, they will start copying your trades and making money from you. So the incentive has to be there for you, for them to be able to do that. They've got to have an incentive, and it just wouldn't make sense to be discarding profitable traders. I mean, if someone came to you with a lot of trading skills, years of experience, and is obviously showing you they make money, all they want is investment, why would you turn them away? Why would you not pay them out on their work? It just doesn't make sense, does it? So prop firms do have that angle. Some of them sell off the data, so they sell off the pro traders, basically what they're doing, their activity, to other people, or like I said, they copy those trades themselves. And then obviously all the failed challenge money goes into admin and things like that, and probably on some firms does account for their overall profit. But the salient fact, at all, is that the reason why so many people fail them are those drawdown limits. I would say there are traders who are good enough to pass them, given the daily drawdown was a bit more. Okay, obviously with your own money you don't have that, but your own money is at risk equally. So those are the main differences. I would say if you've got large amounts of capital, you should use your own money. If you don't, you should probably go with prop funds. Okay, because that will kickstart you and allow you to start earning, so that you can fund your own account. Or you might just continue trading with prop funds anyway. Okay, so thanks for watching, guys. Hope that helps. Don't forget we teach you to pass firm challenges and trade the money for income underneath. See you soon.